Hey, what's going on, guys? How you doing? My name is Jonathan Moore, and I am here with the man, Rick Stein, and I'm going to be asking him some questions as a beginner wannabe investor. So, how you doing today?
I'm doing well, John. How you doing?
I can't complain.
Always a pleasure to see you.
Always a pleasure. Thanks for taking the time.
My pleasure.
I really appreciate it. So, I have a question.
Sure.
After watching some of your content, you talked about self-directed IRAs.
Right.
So I'm in this position right now where, I would like to get involved in real estate investing. Don't have a ton of money to start, but my wife and I, we have some old 401ks from past jobs that are just sitting there. We've had them for a couple years. They haven't been doing anything.
Right.
It's like maybe about like $5,000 or, $8,000 between that range.
Okay.
So how would somebody like myself, how could I actually put that money to work, and is it enough to begin?
Well, that's a difficult question to answer. It could be enough to begin.
Okay.
First of all, what you would do is you would roll over your current IRAs to a self-directed IRA.
Okay.
All right. And the difference is that by definition, self-directed, you decide what you're going to do with the money. They do not invest it for you, as in a traditional IRA. It'll sit in a money market account, which is kind of useless, right? So you want to decide what you want to invest it in. With a self-directed IRA, you can invest in just about anything. Very few things you cannot invest it in, but as real estate investors, what do? We invest it in real estate.
Okay.
All right. So let's just say, for example, you have $8,000 sitting in an IRA, in a self-directed IRA, all right? And you see a nice little property, a little thing in Trenton and Chambersburg or someplace like that, nice little area, right? It's not Beverly Hills.
Right, okay.
But it's affordable and you'll have a decent tenant.
Right.
And we'll say the property is $50,000.
Okay.
All right? And you're talking directly to the seller.
Okay.
And we'll just say...
Let's say you're the seller.
All right, I'm the seller.
Okay.
Fine, all right.
Fine.
In fact, I have one for you.
Well, even better.
Okay, so let's say I'm the seller.
Okay.
And I've done this, I own the $50,000, I want $50,000 for the property.
Okay.
So you would ask me, gee, Rick, are there any liens on the property? Do you have a mortgage on the property? I say, no. I own the property free and clear. Now, when I say that, that opens a lot of possibilities for you.
Okay.
So here's what you say to me, Rick, here's what I propose to do. I'll pay you $50,000 for the property. I'll give you 10% down, $5,000. That's your money. And I'm going to ask you to be the bank.
Okay.
So now, instead of you going to a bank, I'm the bank. So instead of you paying the bank every month, the mortgage, you're going to pay me. And you say, gee, Rick, well, if I did pay you all cash, which you're not going to do, what would you do with the money? And I'd say, well, I don't know. I just stick it in the bank, put it in the CD. You'd say to me, gee, Rick, what are CDs? You already know the answer to this question. Right? What are CDs paying these days? I say, gee, I don't know. I think I'm paying like 1%. 1%. So if I paid you 4%, that would be 4 times the amount you would get in the CD. How does that pay me 4% on $45,000? Yeah, oh, gee, that would be nice. That's better than a CD. I never get 4% in the CD. For how long? You want to get it as long as possible. How about 10 years?
Okay.
Now we can negotiate that, right?
Okay.
All right. So now you're just using $5,000 of your money from the IRA. And you're buying the property for $50,000. I am the note holder.
Okay.
The only stipulation is that my loan, since it's with an IRA, has to be what's called a non-recourse loan.
Okay. And what does that mean?
I'm glad you asked. What that means is that In the very unlikely event you don't pay me and I foreclose on you, I can take back the property, but I can't attack other assets that you may have.
Okay.
Okay?
Okay.
All right, fine. So now you're paying me, let's see, $45,000. That's 900. It's like 70. Well, I don't know. It's whatever the amount is. It's $185 a month. Would be about that. All right.
Okay.
All right.
Which seems doable.
All right. And the taxes, or with everything, we'll say that with everything, with taxes and the mortgage payment and everything else, it's going to come to $600 a month.
Okay.
All right. Fine.
All right.
But you can rent this property out, can't you?
That's what I'm hoping to do.
For $1,000 a month.
Okay.
And you have a $400 a month
Mm-hmm.
positive cash flow.
Mm-hmm.
Now here's the good news and the bad news. This property is owned by your IRA.
Mm-hmm.
So that $400 goes back into the IRA. It's not in your pocket. You can't use it.
Right. So I can't. So it's not.
It's not disposable income.
Okay.
It goes back into your IRA.
Okay.
All right. But think of it this way.
Mm-hmm.
So that's $400 a month. That's almost $5,000 a year.
Mm-hmm.
I have a question for you. Now, you don't have to be a genius at math. Let's just call it $5,000 a year.
Mm-hmm.
You invested $5,000, didn't you?
I did.
Okay, and you got a $5,000 return.
Right. Yeah.
What percentage is that on an ROI, return on investment?
That's 100%.
100%.
100%.
Now, where else are you going to do that, John?
You know what? There's nowhere else I can think to do that.
Okay, now let me ask you this.
Mm-hmm.
Let's say that you have the ability, I'm just going to pay me cash for that $50,000.
Okay.
And you got $5,000 return.
Mm-hmm.
What's your return on your investment?
10%. Mm-hmm.
Would you rather, now, John, this is a tough question, all right?
Mm-hmm.
I want you to think about it because it's very important.
Okay.
Would you rather have a 10% return or a 100% return?
100% return.
You didn't even have to think about that,
Right,
did
no,
you?
I didn't.
So you use $5,000 from your IRA.
Mm-hmm.
You have seller financing.
Mm-hmm.
And your IRA is growing.
Mm-hmm.
You invested $5,000 and your IRA is growing at $400 a month.
Mm-hmm.
Where else are you going to do that?
There's nowhere else I can think of.
No, I really can't either,
Yeah.
right?
I can't. I can't.
Okay. Now, there's a lien on the property, isn't there? It's my mortgage. This is a recorded lien.
Right.
So questions you get, well, Rick, what if I don't pay you? Well, I can foreclose on you.
Okay.
I don't want to do that.
Right.
I could.
Okay.
Okay. Rick, what if the place burns down? Well, you're getting home insurance on it,
Mhm.
and I'm named as the first loss payee,
Okay.
just like any place else, right?
Right.
And it's really that simple.
Mhm.
And I have owned a number of properties through my IRA.
Mhm.
I just paid I had a $45,000 loan
Mhm.
on one of the properties. I just paid him off. So
Mhm.
now I own that property in my IRA free and clear. And he's taking that money
Mhm.
and he's giving it back to me tomorrow to buy out of the IRA,
Mhm.
because his money wasn't in the IRA,
Mhm.
to buy 34 Arlington
Mhm.
at 6% with the substitution of collateral and all the other stuff we talked about.
Wow. Wow. Well, now that you own that property free and clear, maybe we can discuss a note.
I am getting my rent on that property
Mhm.
is $1,355 a month.
Wow.
All right, now of course I got to pay taxes and so on.
Well, of course.
But I have and by the way,
Mm-hmm.
she is a Section 8 tenant,
Oh, wow.
and Section 8 pays the 100% of it, $1,355. I don't have to chase her for the rent. I don't have to listen to any stories.
Mm-hmm.
I get a check from the state. I got it 2 days ago, or yesterday, I don't remember. I think it was 2 days ago, $1,355. I get the check.
Mm-hmm.
The property's owned by my IRA.
Okay.
What do? I
Mhm.
deposit into my IRA. It's
Right.
not my money.
Right.
But my IRA is growing,
Right.
isn't it?
It is.
Yeah.
It's just, and this is just kind of one off real quick. I'll throw this in real quick, but it's interesting because I was talking to my wife about this, after we were watching your videos, and I was saying to her, say for example in a retirement account, right? There's nothing that can give you a return like real estate
Nothing.
could, right? Because even after you get to the point where you can draw down on it, right? You can take out of it. If you had a 401k, let's just say, and you were taking out $400 a month, it wouldn't replenish that quick.
Unless you're going to find the next Microsoft and wait 20 years, it's not going to give you. No, I'm not saying nothing can give you the return,
Right.
but it'll be over a long period.
Right.
But for you to invest in this example, $5,000 and get a $5,000 a year return and get 100% return on your investment, you're not going to do that anywhere else.
Right. It almost seems like a no-brainer.
Yeah, it doesn't it.
It does.
So the question is, why don't more people do it? They don't have the knowledge and they're afraid.
Right.
Okay.
Well, thanks, man. Thank you for taking the time out. I appreciate it.
If I can help you, then I have a good day.
Oh, well, I appreciate it. So thanks. And I'll be asking you more questions along the way.
That's perfect.
All right.
Always my pleasure.
All right. Thank you.